Now, straight to business news. Sean Pellegrin is with us. He's going to start, in fact, in the Middle East today. Iran appearing to have won. That significant concession, really, from Washington, Charles.
The U.S. Has waived sanctions on Iranian oil exports for 2 months while talks between the two nations continue. U.S. sanctions have been in place for decades, putting Iran off from mainstream global oil markets and forcing it to sell its oil to China at discount rates. Global benchmarks for crude prices have continued sliding as a result, almost returning to their pre-war levels. As a reference of Brent, the Brent was at $72 a barrel before the war started in late February. It's currently at $76 a barrel. The U.S. says the other side of the deal is that Iran will allow international inspectors access to its nuclear program. Tehran, though, says it has made no such commitment. Brian Quinn reports.
A crucial lifeline for a battered economy, Iran is set to return to mainstream global oil markets for the first time in decades, as the U.S. waives long-standing sanctions during 60 days of peace negotiations. On the streets of Tehran, hopes for relief.
If oil sales return to the market and people feel the impact, it will be good for the long-term economy.
For decades, harsh U.S. sanctions on Iranian oil have forced the regime to export its crude via a shadow fleet of aging tankers, with most of its supply sold to Chinese refineries at discount prices. Those shadow tankers are now free to operate worldwide. Not only can Iran sell its oil around the globe, it can now do so in U.S. dollars, a further step of sanctions relief that should allow Tehran to replenish its depleted foreign currency reserves by repatriating oil revenues directly.
With regard to our crude oil sales, petrochemical exports and their derivatives, even more important were the financial issues, including banking, insurance and transportation.
Indeed, Iranian financial institutions like its central bank are now exempt from sanctions targeting both the country's nuclear program and the funding of terror groups. The waivers are intended to help ease a global energy crisis sparked by the closure of the Strait of Hormuz, through which 20% of the world's oil and gas typically flows. European oil traders have reportedly contacted Iran about purchasing its crude. It remains to be seen if U.S. refiners, who are also now cleared to do so, will follow suit.
Now we're going to move on with some tech news for you. This is significant job cuts at Oracle, Charles. The
U.S. software and cloud computing giant eliminated about 21,000 jobs globally in the past year, according to its latest annual report. Its total workforce currently stands at around 141,000. The cuts roughly equivalent to about 13% of all staff. The report explained the move, saying, quote, "The deployment of AI technologies across our operations have resulted and may continue to result in reductions to our workforce." Oracle is in the middle of a mad race to feed the AI frenzy by building out data centers, reportedly planning to spend $50 billion on AI infrastructure this year, and reducing its workforce is a way to make room for these investments. Well, this is part of a wider trend in the tech sector. Amazon and Meta have also cut thousands of jobs in recent months as they also invest in AI, according to tech layoff tracking website layoffs.fyi. Over 121,000 people have been laid off in the past year in the entire sector. That figure slightly below the total number of layoffs for the entire previous year.
And we're going to move on with a tech sell-off that's defining what's happening on the markets, in fact, today, Charles.
A number of tech giants like Amazon, Meta, and Alphabet all saw significant drops during the Monday session. Alphabet saw its worst performance in over a year over brain drain concerns, with two of its AI researchers leaving for rivals. Elon Musk's SpaceX saw the most significant loss, its shares dropping over 16% on a third consecutive day of losses. This after the company said it would sell investment-grade bonds for the first time. This is expected to be part of a massive borrowing spree to finance its AI ambitions. The company's IPO just took place on June 12th, earlier this month, and generated a lot of excitement, bringing the stock price to over $200. It's now back at its lowest level since the company's first day of trading, erasing over $600 billion in value over the period.
And it had an impact as well on both Asian and on European markets as well.
Yeah, Asian stocks have definitely been hit, especially the Japanese and South Korean indexes with strong ties to the U.S. tech ecosystem. The Kospi, as you can see there, down almost 10% this Tuesday, and European markets also feeling the weight of that tech weakness in America, with the CAC 40 in Paris down percent lower at the open this Tuesday. Same for the DAX in Frankfurt.
John, thanks very much. Joel Pellegrin with Business